Gold prices rebound from yesterday's sell-off, trading as low as 1915 today, but rallying all the way up to 1948. So taking a step back and looking at that range we've seen since last week's FOMC, 1900 to 1950, we pretty much tested both ends of that range. Kind of gives you an idea of the volatility we're seeing in gold, not only today, but pretty much throughout the month. We've traded as low as 1895 and as high as 2070. So it's been a month of wide price variety in gold. Now, when we talk about gold prices, we typically talk about treasury yields and the dollar and crypto and their effect on gold prices. Well, today treasury yields were lower. That is typically positive for gold prices to move higher. The dollar was higher, which is not positive for gold prices to move higher. And cryptos really were a non-event. They were slightly lower, but didn't see a whole lot of flows that would be affecting gold pricing today. So again, gold and the dollar kind of walking down separate paths here. Typically, a stronger dollar pushes gold prices lower and vice versa. We did not see that. We actually haven't seen that relationship over the last several weeks. So at this point, gold walking on its own path and today trading higher towards the upper end of that range we've seen since last Wednesday at 1948. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you will notice that volatility has been in decline when prices go down and has been creeping higher when prices move higher. Now, the fact that we're in a range would suggest that volatility would remain relatively low. We did see it move up today, but didn't see a spike higher. So as we saw prices moving up, we see volatility moving up as well. But again, we are well off those uber highs that we saw back when we made that high of 2070 earlier this month. But again, seeing vols creep off those lows that we have been trading at over the last week or so. Lastly, let's talk about what the Fed's doing, or what they're saying, I should say, and how it affects gold prices. Typically, when the Fed's in a tightening cycle, which they are now as they tightened rates last week, higher yields, higher rates would be negative for gold, as gold is a non-yielding instrument. But we haven't been seeing that. Gold has kind of been stuck in a range since FOMC, and with expectations of more aggressive rate hikes to come. We heard from two Fed speakers today, one, the Cleveland Federal Reserve Bank President Mester, and also the San Francisco President Daly. Both were urging for more aggressive Fed hikes, kind of echoing what we heard from Mr. Powell on Monday. Now, Mr. Powell spoke today, but he didn't really talk much about policy. He was dealing more about central banks in a digital world. That didn't lend itself to give any real specifics on what's going on with Fed policy. But again, we're seeing some of the other presidents and governors doing exactly that and talking about it. Typically and historically, this would be pushing gold prices lower, but we're not seeing that. So the uncertainty of how the Fed's going to fight inflation, or whether inflation is going to slow down, or at least their plan for a soft landing, so to speak, given the fact that growth is already expected to be lower, raising rates would certainly not be helpful to that. So rising gold prices could suggest that there's maybe a little bit of disconnect between not only the dollar and gold, but the dollar and Fed policy. So keep an eye on what's going on. As we talked about earlier this week, speculators likely were exiting their longs on that big sell-off last week, but ultimately look to be probably getting back in as gold prices have remained supportive, and speculators are typically a good indication of momentum and sentiment in gold. And right now, gold prices, while they were down yesterday, were higher today, and again, remained within that $50 range since FOMC between 1900 and 1950. So gold prices midweek seeing a nice bid at the top end of the 1 week range. Not much happening. We have some news tomorrow, durable goods and claims, but all eyes will be focused on the Fed and expectations for rate hikes moving forward.